I'm Renee Springstead with Fross and Fross Wealth Management and your July 26th market commentary. As always, please take a minute and read the important disclosures contained in this email right below the video link. So, welcome back volatility, right? Last week we experienced some interesting but luckily short-lived swings in the market. While some have identified these swings as a market pullback, we feel like last week serves as a simple reminder of what market volatility feels like. It was too short-lived to call a setback or even a pullback. Last week began with a significant drop. If you remember last Monday, turning on the news, reading the newspaper, it was all about it, right? But a mere 5 days later, by Friday, we're reaching new highs and very little coverage on that quick turnaround in any of the media sources. And this is something we've been discussing, this strong possibility of volatility in the second half of this year. Last week's minor drop reminds us that market pullbacks are a reality we have to live with. And today we're going to go ahead and discuss 3 of these events that we could see being players in the volatility for the next 6 months. The first is future corrections, and they're probably going to be related to a couple areas such as uncertainties related to the pandemic, investors anticipating what the Fed's taper timeline is going to go ahead and look like, and then also this high bar for growth expectations. All of these points could contribute to a significant pullback in the second half of this year. And we saw that the Delta variant was the main player in the volatility we saw last week. This week, the spotlight's going to be on the Fed as it has a meeting again to discuss questions on its view of inflation and also what policy changes it might be making. Our security blanket of federal stimulus has kept the market volatility at bay for the past year or so, but this soon isn't going to be the case anymore. Real pullbacks could start to occur as the Fed policy tightens up, which we're not expecting to, if you remember, happen until about 2023. So right now the Fed is just talking about what they're going to do as and if they see inflation become a player. Also, there's anxiety over questions related to whether or not the economy has hit its peak. And this expansion, while it is slowing in pace, is still continuing to sustain itself. However, even though there's volatility, we historically have seen growth continue after economic peaks have been reached. It's just the market going up and going down, right? But little by little, we're looking for that eking of the mean to continue in an upward direction. And if we think about it, good markets have setbacks. It's just part of what happens, right? There hasn't been a single bull market that has complete absence of setbacks and volatility. Even the longest bull markets have had their fair share of swings. Corrections have been attributed to a couple different factors in the past, such as federal policy shifts and growth scares. Both of those should sound familiar as we're experiencing both of those attributes right now. And last week, we even saw swings in the interest rates that proved to us that bonds, can experience volatility as well. So even though we think of bonds frequently as a safe haven for portfolio diversification, they're on the other spectrum of things. And then lastly, the proof is in the pudding. It's easy to buy into all the hype that we see and be scared of these temporary declines, especially with the media hyping it up. But ultimately, they can't be timed. Wise investors are in it for the long term, and they're using their decision making based on facts and also taking a bird's eye view and looking at what's happening in the economy and staying the course, not swinging with the ebbs and flows of what the media is hyping up. The facts are that the Fed remains accommodating, the economy is still expected to grow at an above average rate, and also corporate profits are on the rise. So while we may not have seen much market volatility so far this year, we do remain cautious. It's important to be vigilant and pay attention. We will likely see more significant pullbacks in the future, but the facts remain that market conditions, although potentially volatile, remain secure for future growth, and that They present potential buying opportunities amidst this continual economic expansion that we're seeing. So, as always, thank you for joining us. And if you have any questions, don't hesitate to call. Have a wonderful week.